Let's talk about picking rental markets. People always ask, how do you pick markets? And honestly, it's so simplified. It's not even funny, guys. I think a lot of investors overcomplicate the hell out of market selection. They get buried in spreadsheets and cap rates and appreciation charts and migration data. And all that matters to some extent, of course. But for us, we focus on three basically core fundamentals. Number one, population. Are there renters? Is it stable? Is it growing? Now, with that said, if we run into maybe a headline that says there's a slight decline in population, we don't need to have investors panic over the headline about slight population decline. If you're talking about a major metroplex with 1 million plus people, I think a slight dip is not going to hurt your rental population very much, and we're not going to let that scare us away. Now, sometimes people move from the city center to the suburbs. Sometimes there are short-term economic shifts, but a massive established metroplex with diversified economy and employment and strong housing demand can still be an excellent rental market, even if population growth isn't exploding every single year, right? Number two, jobs and major employers. We like markets that have multiple economic drivers. So not just one industry carrying the entire city. Ideally, you've got healthcare, logistics, transportation, manufacturing, education. Government jobs are great, right? Just because one employer leaves a market or a town, we don't want the whole market to collapse, right? So the third thing, and honestly, this is the most important thing in my opinion, is property management. We represent 9 markets. We have teams all over the country. The reason we're in those markets is mainly the property management, right? There's other markets that are phenomenal investment markets that we don't represent because we don't have good property management. So property management, you can pick the greatest market ever and there's good opportunities everywhere. But if you don't have strong property management, the management can fail, right? Your property can fail. So a strong property manager operates the asset day to day. They invest. The investment can turn into a nightmare at the end of the day if your property manager is not that great. So, they deal with tenants, they handle maintenance, they manage churns, collect rent, protecting your asset. So for us, the reason we represent the markets we do is mainly it comes down to trust. We trust the operators, right? We trust the property managers. We trust the boots on the ground to rehab, to manage, right? That's really the filter for us. You can take we're not a big property grading company, but you can take a C or a B plus neighborhood with an amazing property manager and usually outperform the A market or the A neighborhood with poor operations and management. So, real estate is ultimately an operations business. You're going to have maintenance, you're going to have vacancy. When you do have those times, what happens, right? So yes, we look at population trends, we look at job diversity, affordability, landlord friendliness, of course, the economic stability. But the biggest question we ask, and I think you should ask too, is would you trust the team that's managing your doors and your property? If the answer is yes, then we're interested in that market. Take care, guys. Be well.